right? Are we up to 10? Are we up to 10? Are we up to 10 in the live stream? Are we up to 10? Right, thank you guys from YouTube. If you are watching from YouTube, thank you guys. Thank you guys, thank you guys. So today is the 7th of November 2020. Are we up to 10? 2023. So I'm gonna be going through the market today, right? So I'm gonna be giving analysis. If you have questions, if you have requests of any market you want us to analyze, you can just make your suggestions on the YouTube page. And if you are watching from TikTok, if you want a better view, a high definition view of this live stream, you can proceed to my YouTube channel. To get access to my YouTube channel, click on the link on my bio. Once you click on the link on my bio, you'll see the, navigate down, you'll see the YouTube channel. Click on the YouTube tab so that you can watch this live stream on YouTube, right? So let's start with Euro USD has been requested from traders in the live stream. So based on Euro USD, I told you guys there is a possibility of a pullback. So this is actually happening right now. We have a lot of traders who actually bought high right here. So you can see the reasons why you shouldn't buy high. Now you have the reason. Now you can see why you shouldn't buy high. You can see the resistance structure. You can see the resistance structure right now. Price made a pullback. Imagine those who jump into the market right now, they have been reversed down. So currently, remember what I told you in the live stream we held on, I think that was last week. I stated, I think that was a Sunday. I stated I'm looking out for a pullback with this level, alternatively to the dynamic resistance or dynamic support of this rising channel. So my analysis still remain active on Euro USD. My analysis is still active on Euro USD. So these are the zones we are looking at for trade opportunity right here, alternatively right here. So these are the two zones you should be looking at for long entry on Euro USD, right? So that is the analysis on Euro USD, so simple as that. Next is gold. I as well give analysis on gold. I told you guys there is a neckline structure or holding this upright head and shoulder chart pattern. And a lot of traders have been asking me, is this pattern confirmed? Can they jump in right now? Can they sell? Can they do this, that, blah, blah, blah? Despite I gave analysis on this currency pair, these assets, is unfortunate. Traders are still asking, when should they get in? Where should they get out? No. I think some traders just attend this live stream without paying attention to the information I share in this live stream. Because if you pay attention to the information I share in this live stream, I see no reason why traders should keep on asking me where should they get in, where should they get out in this market right here. Because I already gave the details on how you should approach this currency pair right. I mean this asset right here. I already gave details how you should approach this asset. So this is what we have. And based on 4-hour chart, this is what we have. So the neckline of this pattern is yet to be broken. It is yet to be broken. If you told me this pattern has been broken, I'll tell you it's a lie. Because if you tell me this pattern has been broken, then it means you are connecting this low right here all the way to this structure right here. This is what you probably have been doing, and then you are having your trend line up this section right here. But I think this pattern is yet to be broken, because if you ask me right here, where is the right shoulder of this pattern? This is the right shoulder right here. I mean, this is the left shoulder. This is the left shoulder. So where is the base of the left shoulder? This is the base of the left shoulder right here. And the left shoulder base extends as a neckline. So currently this pattern is yet to be broken. So this is why I refuse to conclude this pattern has been broken. Right here is the head and right here is the right shoulder. So this pattern is still active. It's not yet confirmed. Not yet confirmed. So for those of you who want to look for short entry on gold, you have to be very careful not to jump the gun. You have to be very, very careful not to jump the gun, right? You have to be very careful not to jump the gun. So if I were you, I would have loved price to break below this neckline before I look out for short entry. Alternatively, if we could have a pullback, from this structure to test this major structure right here, if you can have a strong bearish rejection, then it will be nice if we can look out for a possible short entry at this median right here, right? So this is another way you can approach this market right here. So this is based on my own view on this asset. So for those of you who want to short right here, and again, pay attention, there isn't much volume right here. If you tell me this is a breakout of neckline, there isn't no strong breakout right here, and this is why you have to be very careful. You have to be very, very careful. You have to be very careful when you want to take patterns breakout in the market, because most of patterns are traps. You can't expect the market to do the obvious things. You don't expect the market to do the obvious thing. If you want to be profitable in trading, you have to learn that the market will not do the obvious things, right? So that is my view right here. So I'm a conservative trader. I don't just jump into the market anyhow. I take I take note of all details in the market, close details of price in the market. So this is what I do. So despite I come right here, I see share analysis with traders still come to the Telegram group and still ask me where should I buy, where should I short, where should I make entry, you know. So I think the importance of this live stream is to give you an idea of what to do in the market, not to come back again and start asking what should you do, where should you get out, where should you get in, right? You know, most time I don't give response to those answers. Because if you have been following the information I share in this live stream, you should know what you need to do in the market. And if you don't know what you do in the market, then you have to opt in for a mentorship program before you start trading, right? Opt in for mentorship program before you start trading. You can't keep asking people what you do in the market. That means if you ask people what you need to do in the market, it means you don't know what you are doing. But if you know what you are doing in the market, if a pro trader, an experienced trader, or a mentor gives information, you'll be able to grab the information and know what you need to do, maybe to follow the information or maybe never to follow the information. But if you keep on asking what should you do with the information, it means you still don't know what trading is all about. Then the best advice is to opt in for a mentorship program, right? Because you don't expect a mentor or a trader to tell you when to get in and when to get out, which I don't do. I only give you analysis based on probabilities. Now it's left for you to get on your assignments to decide which of these probabilities suits your trading style or your decisions in the market, right? So for those of you who have been asking me where should you get in, where should you get out, if you ask me those questions, sorry, I won't give answers to that, right? I only want to give answers to questions which I know that yes, they are reasonable, right? So based on gold, the neckline is yet to be broken. So let's wait for a daily candlestick. If we can see a strong daily candlestick to break out, then we know that yes, gold is broken. But if you are looking out based on the 4-hour chart, if you are looking at gold that has been broken on the 4-hour chart, there's a higher possibility you could be trapped. You could be bearish trapped, because if you call this section right here the neckline, to me it's not a neckline. I would prefer to treat this base right here as the neckline of this pattern. You can see as the neckline of this pattern. So instead of making a short entry right here, why not wait for a pullback to this level, to this previous base right here, a pullback to this level right here. Once you can see a pullback to this level right here, then you could be looking out for a short entry from this structure right here. That is another way you can approach this asset. Alternatively, if you cannot figure out this, if the price should make a strong bearish breakout or below this right here, you should be looking out for something like a pullback for a validation. So these are the ways I want to approach this asset right here. So this is based on my view on gold. These are the two ways I'll be looking to approach gold. I will never take the first bearish breakout. I will never do that, right? So let's move to NASDAQ 100. NASDAQ 100. So let's check NASDAQ 100. NASDAQ 100. If you are right there, if you are yet to join my Telegram group, join the Telegram group. And there's something about you traders, is most of the traders in this live stream want to be fed fish, but they are not interested to learn how to become a fisherman or fisherwoman themselves. If you really want to survive in this game, you need to know how to find out setup for yourself. You don't have to rely on your one mentor or one coach to tell you when to act and when to get in, when to get out. And that's not the best way you can learn, right? And that is why most traders keep on parabolating up and down based on trading signals. Even sometimes if a mentor sends you a correct trading signals, if you don't have the right mindset, the right knowledge about trading, you will still not be able to use that signal. Even though the signal is a good setup, you will still be able to make use of it. So this is why you need to learn how to trade first before you start asking questions: when should you get in, when should you get out, how much can you make, how much can you do this, right? You need to learn how to trade. So once you learn how to trade, once you're in the live stream, once a trader share his or her idea, you'll be able to grab the information. Easy to grab the information based on what is seller is trying to say in the market, right? So based on Nasdaq, we have a channel, and this is the channel right here. We have a channel based on Nasdaq. So for those of you guys who want to trade Nasdaq, this is what we have on Nasdaq. We have a channel. Now we can detect a channel on Nasdaq. So for those of you who want to chart this channel right here, I told you guys why I am not yet comfortable to take a chart right here, right? Let's check the weekly chart. Based on the weekly chart, I can see a strong previous bullish weekly bar. One of the reasons I don't want to do that, this might sound so strange or difficult for you to understand, but this is based on my trading strategy. I trade from the higher time frame. So instead of looking out for a pullback, I'd rather be looking out to see how this weekly bar, or what the outcome of this weekly bar. Maybe it's gonna be up or down, right? So based on the weekly bar, you can see yesterday bar capped a peanut bar. That was on Monday. There isn't much volume in this market. There isn't much bullish volume. Let's check the 4-hour chart. This is what we have on the 4-hour chart. This is what we have on the 4-hour chart. You can see the price transformation within this range right there. There isn't volume right here. Here comes the 1-hour chart. You can see that. There's a channel. Although some traders might have preferred to make a short entry right here. Let me show you why I am still not yet comfortable to short. Let's check the 4-hour chart. Based on the 4-hour chart, I haven't yet seen a nice bearish interest. Just like the example we had right here. You can see the bearish interest we had right here in this market. You can see the bearish interest we had right here in this market when price got to this resistance structure right there. You can see the strong bearish technical bar. You can see the break of structure, retest of structure, and break of structure all the way down. So based on the Nasdaq 100, we haven't yet figured out this type of pattern right there. Price is just pulling to the resistance structure. So if you can see something like this, maybe like a pattern breakout, head and shoulder, whatever pattern at this resistance structure right there, that would be nice. If you can see something like maybe a valid rounded top with a nice shaped base, right? And based on the 4-hour chart, I'm yet to see a strong technical short signal. So why not wait for a day chart, such as the example we have on this previous rally right here in this market. Right from this structure right here, we had a bearish outside bar. This was the bearish outside bar that led to the bearish swing right down. Right there we have a doji candlestick and a double top that contributed to a more downtrend. So based on what we had right there, why not say let's wait if you can see something like a morning evening candlestick and a pullback into the morning evening candlestick before we anticipate for a short entry. So this is based on my personal view. So if you want to make an aggressive short entry, based on aggressive short entry, then make sure you reduce your position size and only add to your position when the market keeps on going in the direction of your anticipation. And then another reason why I don't want to short in this market is based on the strong bullish aggressive rally from the swing right here. You can see from the swing right here, we had a strong bullish aggressive rally, unlike when compared to the overlapping of bar right here. The overlapping of bar right here signifies there was a state of indecision in this downtrend flow right here. Likewise right here, you can see the forces of bulls and bears were in tug of war. So when you compare the price actions we have in this market right here, I'm gonna try to enable another tool right here so that you guys can, okay, that's good. I think this is This is good. I want to show you guys some information right here. So when you compare the pattern we have right here, when you compare the pattern we have right here, let's compare the pattern we have in this structure right here. You can see the pattern we have in this structure right here. You can see that pattern, and when you compare this pattern, let's copy and paste this pattern to what we have right here. Okay, you can see how price overlapping of price at this medium. You can see that, and when compared to this medium, now let's see the overlapping of price at this same medium right here. Let's paste this. Can we figure out overlapping of price at this medium right here? There was a strong bullish momentum right here. So if you are trying to chart based on this structure right here, if you are trying to chart based on this structure right here, based on this strong bullish momentum, then you need to see a strong bearish momentum. You need to see a strong bearish momentum if you want to go against this previous strong bullish bar. I've told you guys, whenever you are referring to any information, always input the asset you refer to. So I don't know the cup of handle you are talking about. Is it cup of handle on gold, on silver, or Euro USD, or GBP New Zealand, or which of these assets? Always input the asset you're talking about whenever you are passing on any information. So your information right here now, it has no definite use for us because we don't know the asset you are referring to, right? So based on what we have on the Nasdaq 100, I'm still kind of skeptical to execute a short entry. So let's check back based on what we have on the weekly chart. Based on what we have on the weekly chart, I can see last week was a strong bull candlestick. You can see from the support structure right here, it took like 3 weeks for price to test this high, and from the support right here, it took 3 weeks for price to test. It took like 2 weeks for price to test this high, and from the support right here, it took between a week for price to test this structure, which shows us that there's a strong bullish momentum in this market. So you guys, you want the market to do the obvious things so that you can trade based on the obvious things. The market will never do the obvious things. If the market should do the obvious things, there is no way the institutional traders, the banks will make money in the market. So this is why the market always, the institutional traders always trade against you, because we want the market to do the obvious things, and the market will never do that. Because if the market should do that, there's no way the banks will make money. Because if you make money, the banks are not making money. You have to blow up accounts so that your brokers can make money, so that you have to have losing trades so that other institutional traders can make money, right? So you don't have to do the obvious things in the market. You can see right now, price is currently breaking this structure. So I want to patiently wait. If you don't have patience, you can't make money in this field. And I swear, I told traders why I don't want to look for entry right there, because the risk to reward ratio in this market is kind of low. If you view this market right there, we have a definite support structure right here, unless if you don't have this on your chart. This is a resistance structure, and a support right here. And they take note of the strong bullish momentum right here. So this is why I don't want to trade this asset. I'll be looking out for a low risk to high reward ratio. So if you told me you want to chart in this market, well, good luck. No one is the master of the market. The market can decide whichever direction it wants to go, right? But based on what I can see, based on the previous highs right here, which was resistance, and this level is still acting as a support for price right there. So tell me, if you make an entry right from this structure right here, where would you put your stop loss? If you put your take profit to this level right here, where would you put your stop loss based on this breakout right here? You have to put your stop loss at this high if you are taking the first breakout of this pattern. If you are taking the first bearish breakout of a pattern, you have to put your stop loss at the point of invalidation. Where is the point of invalidation of this pattern? The point of invalidation of this pattern right here is at the high of the right shoulder, which means your stop loss has to be right here. So if you are taking the first breakout right here, which you call a breakout, then your stop loss will have to be at the high of the right shoulder of this pattern, which is the point of invalidation of this chart pattern. And where should you be target? Where should your target be? Your target should be at the next closest support level, and the closest support level right here in this market based on past historical action is at the high right here, which acts as a double top for this downflow, and this level is at the price of the 1946. So if you analyze your risk to reward ratio in this market, that is one risk to reward ratio. So it means you are having one risk to reward ratio. So if you are a trader that puts risk into consideration, you will never make a short entry right here. You will look out for a way to reduce your risk. And this is one of the reasons I stated I want to see price to make a pullback. If price can make a pullback to this level right here, then I'll be looking out to make a short rejection. If I can see a pullback, from this structure right here, and then find a rejection all the way down, then I'll be looking out to make an entry right here. Then I will know, yes, based on the fact that price was being rejected right here, then this is a potential resistance structure. Then I have to have a way to move my stop loss all the way down so that I can have at least minimum of 2 risk to reward ratio, which means I can put my stop loss at this high right here, and then have at least 2 risk to reward ratio before the price get to this support structure. So this is how I reduce my risk. So you don't just get into the market with the hope, oh, this pattern is broken, this pattern is this, then get in without calculating your risk. Sometimes you have a good setup, but the risk to reward ratio is not favorable. What should you do in that type of market? Stay off that market. There are different factors you guys have to combine together before you take a trade in the market. It's not based only on your technicalities. Not only on your technicalities, but one of the fastest way traders blow up their account is after they have learned one of the few basic things of technical analysis. They believe that is everything they need to know. When pattern, one of the technicalities of trading that tend to confuse traders, beginners traders, inexperienced traders is chart patterns. Not all chart patterns are worthy to be traded. You have to understand this. If you don't understand this, you will never make money. Not all patterns are worthy to be traded. Most patterns in the market are trap. If you don't know this, you always make loss in trading. Now let's go back to historical price action. Before price was being capped at this medium right here, let's go back right here. So let's make cancel right here. There's something I want to show you guys on this chart. I remember this. I gave this analysis one of these days ago. No, when price was still moving within this range right here, I had a live stream that day, and a lot of traders were telling me right here that this was a double top. They were saying this was a double top. What later happened? The double top failed and went up and resulted into massive losing trade for a lot of traders in the market. So you traders need to learn. You need to learn in the market. If you don't learn in the market will always teach you a lesson forever. You see, most traders said, well, this was the first top right here, made the market pull down, and the market got right here. They said this was the second top, and they were open to sell from this level. A lot of traders executed a sell entry right here, and the market will did what? Cut them out. So don't expect the market to do the obvious things. And I told traders that day, I said the best way I'll be willing to look out for this pattern is if this pattern can form a complete double top and then a pullback that this is a real top, double top, before I can look for a short entry from the retest before I can go all the way down. Now another trap is coming for traders who are not willing to learn in the market. So if you think right there you have to short right here without looking for a real validation, without looking for a validation of the structure, without looking out for a real change of market structure, you will always lose in trading. That is just it. Even the best setup sometimes failed. So why should you take a setup that has a low probability? If you don't understand that trading is all about probability, you will never make money in trading. That is the reality. You need to understand that trading is all about finding probabilities to support your trading decision. The higher probabilities you have, then the more that setup tend to be reliable, right? So for those of you who want to chart right here based on double top, good luck to you. But based on my own trading strategy, I haven't seen the confirmation right here. So let's check GBP yen. GBP yen. Let's see what we have on GBP yen. The same goes to GBP yen. Some traders actually were charting right here, believing that this head and shoulder has been confirmed. And I told traders right here, before this pattern needs to be confirmed, it needs to break below this neckline right here. You can see right now what happened. price is moving upward. So based on what I can see on GBP yen right here now, GBP yen is showing a bullish technicalities, but I am not comfortable to make any entry or to trade anything right here. So if you are trading if you want to trade GBP yen, then you guys need to pay attention to the resistance structure, which acts at the price of the 186. So price is currently getting closer to this level right there. So if you are looking for a long entry at this medium, it means you don't know what you are doing in trading, because this is a resistance structure right here. So if you are now looking for a long entry, it's either you are trading on the 5-minute or the 1-minute chart. Even if you are trading on the 1-hour chart, you should know that price is currently moving aggressively. Even on the 1-hour chart right now, price is showing something like an head and shoulder chart pattern. You can see it, which is showing you an imminent reversal to the downside is approaching. So this is my view. So you got to be very careful whatever you want to do in the market. So based on my trading strategy, I haven't yet seen any position on GBP yen. So it's time I disclose my positions in the market. It's time I disclose my positions. So I already sent out how I got some trade set up on GBP USD and the Euro USD and the US oil, and all these trades are in profit. And I told you guys, actually I didn't share the GBP USD and the Euro USD trade with traders, because I know some traders will actually misuse this opportunity. Some traders will abuse this trade setup, because the trading setup on GBP USD and Euro USD was a counter trend trade setup based on my decision. So it's a risky trade. I told you guys we are looking out for a pullback because price has gone so high, and I told you guys I'm looking out for price to make a pullback all the way down before I can look for an entry. So after price got to this high of this resistance structure, I initiated a small position size based on counter trade setup, and I'm currently in profit, and I've traded some profit to break even. Can see that. So my initial decision was I'm going to be looking out for a long entry at this resistance structure of the 1.231, likewise the structure of the 1.2218. So I shorted at this structure right there. I executed a short entry right from this medium, right? So with a small position size, and I've already traded my profit to break even. So if the market should reverse up, then it means I'm out right there. It means I should be looking out to trade against the counter trend move right there. Likewise on Euro USD, I had a small short entry and already trade my profit to break even, because I told you guys, I said we have a rising channel. We had a rising channel right there. So this was resistance structure. For those who jump in right here now, they have been reversed. So I made a short entry at this close of this 4-hour candlestick all the way down, and they already trade my profit to break even. So if the market should retrace upward, I have the sufficient funds to cover my little spread and other things in the market. So I have nothing to lose again. So this is how I manage trades, and this is one of the reasons I do not set out this trade setup to traders in the community, because we have some traders who will abuse this setup, because this setup right here is a very risky setup. So I only tend to set setup that are less risk, that has less risk to traders. So right here you can see, so the position I'm currently still holding, which I'm going to be still holding for a long time, is the US oil. And I told you guys yesterday I added another short entry to my US oil trade. So currently right now I have 3 open short positions on US oil, and I've been holding the trade. I've been holding this trade right from last week. I opened another one yesterday. I opened 2 last week. So I've been holding on to 2 last weeks, no? So and I opened one at the close of price on Monday yesterday, which was on the 6th. So let me show you guys how I got this trade set up, should in case next time you find this type of pattern in the market, right? So based on what I can see right here, I showed you guys there was a formation of a head and shoulder chart pattern, right? And a lot of traders said no, they can't say anything right here. Even there was a trader in the live stream who told me this market is going up, and I said okay, let the market decide whichever way it wants to go. So let me show you how I got this trade set up right here. So this was the neckline of this pattern. So I got the entry right. Okay, I think let me expand this chart properly so that you guys can see. Yes. So this was the pattern right here. So we got the neckline. After price broke the neckline right here, I made my first short entry. I made my first short entry at the retest right here. This was my first entry. And then after price retested once again, that was last week, I made another short entry right here once again. After I figure out another pullback into this bearish outside bar and the rejection downward, I made another short entry at this medium S again. And then I've closed all my first and second position to break even. I mean, I've traded my first and second short position to break even. So I'm left right now with a risk on the third trade. So this is how I'm going to be looking to ride this trend down or to the support structure right here. Take note, we have a swing low right here. So as once price gets to the swing low right here, then I'll be looking to trail my profit so tight. I'll be looking to trade my profit. All my profit must be traded. I mean, I must trade my stop loss so tight because there's tendency for price to make a bounce up. I'm targeting more lower for the swing low all the way down to this structure right here. So this is how I'm going to be managing this trade. And I told traders when I took this trade last week, I said this trade is not the trade you think you take in a day and you think you're going to make profit. It's a trade that could last you for like weeks. It could be 2, 3, 4 weeks or a month. So this is a swing trading strategy. So this is how I manage my trade. And then the lesser trade you take, that doesn't mean you won't make profits. And that is the wrong mindset about traders. Some traders think the more trade you take, the more profit you make. No, it doesn't work that way. When you take a lot of trade, you expose yourself to a lot of risk, a lot of commission, spread, swap, whatever, So that's my view on the US oil. So I see I have 3 open short position on US oil, and fortunately all the 3 positions are in profit, currently in profit right now. So at the end of today, I'll be looking out to see what price has to do with this level. So let's see, maybe price is going to find a rejection or support at this structure right here. If price can find support right here, then there is tendency that price might be looking out for a bounce to test the structure before continue all the way down, right? So I'm still monitoring this asset. I'm still monitoring it, and I will be looking out for a way to add to another 4th position. So this is how I keep on adding to my position, and the level I'm targeting at least. In fact, I'll be looking out for an exit. I have to get to this structure right here. So this is the next potential support. So I have the first TP1 right here, TP1, and I have TP2 right here. It all depends on how market react to this level. And I have the final TP right here, TP3. So these are the type of trade I take, and I manage this trade. These are TP3. So this is how I arrive my trade. So I got in first at the entry right at the break of the market structure right here. You can see that. I got in right here. All my entries are this medium right here. So I keep on trailing all the way. No, I actually got in right here. I added to another position right here. Let me show you guys. I think, yes, this was the first one. I have to mark with a different color of candlestick right here. Okay. So this was the first entry at this medium right here. And then the second entry at this medium right here. So you can see I keep on taking the market. As the market keep on breaking its structure, I keep on getting down, keep on adding to my trade. So this is how you trade in the market as a pro trader. You don't have to chase the market, chase out the market. Just stick to one asset and capitalize on it once you get it. Right? So GBP yen, I gave analysis on GBP yen. GBP yen, I gave analysis on GBP yen. GBP yen is close to resistance. So if you are trading GBP yen, you need to be very careful. GBP yen is close to resistance structure. This is resistance on the day chart. You can see that. So GBP yen is close to resistance structure. In fact, it's at resistance structure based on the day chart. You can see that it's at resistance structure. So before you be looking at right now, you shouldn't be looking to make any entry. You'll be looking to see what price has to do at this resistance structure before you can decide maybe you want to take a short trade or maybe a breakout with your call. So at this medium right here now, is a point whereby you shouldn't be doing anything. The only thing you should be doing right here is if you already have, if you add a long position right from this bar right there, the only thing you should be doing right now is to trade your stop loss right now to the low of today's of yesterday bar. You can see that price already made a retest of Monday bar. This is Monday candlestick. So if you already had a long entry, maybe at this medium right here, then at this medium right here, your stop loss should be moved to this zone right here. You should have trailed your stop loss to this level right here. So this is what I think you should be doing right now if you are trading GBP yen. If you don't have an active buy position, then I don't see you to be looking for a long or short right here, because you will want to short or long at the middle of the trend. You don't do that. So that is my view on GBP yen. I already gave analysis on gold. So most of you get to the live stream late and you keep on wanting me to repeat myself. Someone said, how much capital make I hold before you teach me? If you're interested in the premium mentorship program, click on the link on my website. Click on the link on my website. All the details is right there. Once you are in my Telegram group, if you really want to learn a FOSA, once you're in my Telegram group, just type mentorship. Type the word mentorship in my Telegram group. Then the admin will send you the link to access the premium mentorship programs. Right? So today this live stream is to share traders my opinions. It's not to advertise mentorship programs. You know, I'm not a hungry mentor or a trader. And that is why most time you guys know I don't really emphasize on my mentorship program. So my mentorship program is optional. It's for people who really want to take their trading skills to the next level. So it's optional. So I'm not like other traders or coach or mentor. All what they do is to emphasize on you to buy their mentorship program, buy this, buy that, buy that. I don't do that. So it is optional. If you really are interested that you want to take trading as a real profession, as a real job, and you want to start making money in the market, and you want to be under the mentorship, the guidance of a real mentor who has a real result, who has a track record, then you can just join my Telegram group and type the keyword mentorship, so you get access to where you can get the course on my website. Right? So I don't really talk about that. I trade daily and I make money in the market, right? So the focus right here is not to advertise mentorship programs, but if you are interested, you can check on my website for that. So someone said, please, SAU, I know I already said it, I just came now. Yes, I already gave details about XAU USD. Let me go back again. SAU USD. I told you guys, for those of you who are looking out for a breakout, I'm not going to be looking out to trade this trade based on the bullish momentum we had in this market. Something you guys need to know is trading is all about defining probabilities. Trading is 50-50 game, 50-50 zero-sum game, right? In trading, once you execute a position, your chances of winning is 50-50. It's either you have a 50% winning chance or you have a 50% losing chance. Win and loss. And if you are at the middle, you could be break even. So before you take or make any decision in that type of game, what you can do is to try to figure out the setup that has the highest probability in your favor. So based on what I have right here, there's a lot of short setup right here, but based on the strong bullish momentum right here, I'm kind of skeptical to take this trade. And based on the low risk to reward ratio, high risk to low reward right here, I don't want to take this trade. Take a look at what we had right here. This was a resistance structure right here. This resistance held price again. It shows us this resistance is a powerful level structure. Likewise, price broke out right here. Now there's tendency price could have a rejection as support right here and then reverse it upward. So this is why I don't want to short gold. This is why I don't want to short gold. So you have to think about this. Before you take any trade in the market, you have to think that what are the factors that could disrupt or that could serve as an hindrance for my trading decisions. So by the time you ask yourself this question, this will help you to avoid mistakes, traps in the market. If you are looking to short right here, where would you put your take profit? Technically whenever you are trading, you'll be targeting the next swing level or next support or demand structure. Right here we have a resistance structure right here. Not did this resistance structure rejected price for once, it held price 2 times, which showed us that This level right here is a strong structure. You can see as resistance right here. It held price and then resulted into what we call a double top. You can see how the double top held price all the way down. You can see that. So an example of a breakout of a pattern is example of what we had right here. You can see what we had at this swing low right here. At this swing low right here, what we had right here. You can see how price broke this neckline of this pattern based on the daily chart. So if I want to take this setup right here, I have to see a strong technical signal before I can go short, because we have a support structure right here, and then whenever price tends to break this level, it always serves as rejection to the upside. So I need to see maybe a day candlestick breakout, and if I'm taking a 4-hour chart right here, I need to see a technical 4-hour strong bearish breakout. And if you want to make an entry right here, where is the next stop or support structure? It's at this structure. So the risk to reward ratio right here is not favorable for my liking, but that doesn't mean this trade will not go down. I'm not saying this trade will not go down. Take note of that. But based on the risk to reward ratio right here, I don't like the setup. I'm looking, or I am focusing on the risk to the profit ratio. So the first thing I look out for whenever the last thing I look out for in the market before I make my final decision is the risk to the reward ratio. So the risk is too high to the reward right here. So this is why I don't want to get in right here. Right? So I want to see a way whereby I can have a strong daily close of candlestick and then have a pullback into the day candlestick. A pullback into the day candlestick. If you can have a pullback into the day candlestick, then a sharp rejection downward, then that would be nice. That would be nice for me, so that I can reduce my risk and add the minimum 2 risk to reward ratio to the support structure. Okay, so that's my view. If you guys want to continue with that, you guys can proceed with your decisions right here. Right, so I'm taking in time of risk before I take my decision. In time of risk, that is very important to me. Risk is very important. I don't just focus on the profit, I also focus on the risk. And this is why most traders lose. They only focus on the profit aspect. You have to think about risk before you think about profit. Don't just think about, if I take this trade, I can gain $1,000. Also ask yourself the question, if I want to take this trade to make $1,000, what is the risk involved? Some trade which most of you traders take a risk of $2,000 for making $1,000. If you keep that, you can never win in the market, because what happens when you have 2 winning trades and you have 5 losing trades? Your account is blown up. Yes. So the importance of risk to reward ratio is to help you to be at the upper side if things are not working as been expected. For example, in a week, if you execute like 5 trades, let's say for example, you execute 5 trades in a week, and then out of the 5 trades, 3 were losing trade, and then 2 where you have 2 winning trade. So on the 3 trade, if you risk $100 on the 3 trade, that is what? That is $300, right? No, let's get this. Let's get it. Let me get this on a whiteboard so that you guys can understand this properly. Let's get it on the whiteboard. All right. Now this is a whiteboard right here. So on this whiteboard right here, you execute 5 trades. 5 trades in a week, right? 5 trades for 1 week. So you guys will think about risk before you decide to do anything. So out of the 5 trades in a week, you have 3. Let's make it to be 10. Let's make it to be 10, because I know majority of beginners, day traders want to execute a lot of trades, because 5 trades in a week is kind of too small for inexperienced and newbies or struggling traders, because struggling traders believe the more trade you can execute, the more profit you make in the market. No, that is not so. So let's say for instance you execute 10 trades in a week, right? You execute 10 trades in a week, and you target on the 10 trade, you have 6 losing trade. Yes, you have 6 losing trade. You have this right here. And then on this 6 losing trade, you risk $100 for each trade. So that is 100 times 6. So that gives you 6. That gives you what? No, let's use this to be red, so that you guys can know that this is red, this is danger. Because I want you guys to always find this point very important, because if you guys have this understanding, this will help you guys to trade well. Okay, you have 6 years red, you can know that this is danger. You have 6 losing trade, right? And you risk 100 on each trade times 6. So this gives you 600, right? And I will show you the winning rates, the winning percentage you need to have to be profitable. You don't really have to have 90% winning rate or 100% winning rate before you can be profitable. And this is what most of these professional traders or mentors, fake gurus, fake mentors use to capture, to deceive you guys. They tell you they have a 90% winning strategy, they have a 100% winning strategy. There's no strategy in the market that can give you 99 or 100% or 90% winning strategy. There is no setup that can give you that. If someone tells you his strategy is 90%, 95, it means such trader means out of 10 trade, he hardly lose 1 trade, and which is too good to be true. Okay? And this is what most beginners, inexperienced traders want to hear. Inexperienced beginner traders want to hear about the word 10 or 100% winning strategy, 90% winning strategy. No. When you hear that, it's a red flag. Run. Right? So you don't need 90%, 100% winning strategy to be profitable. Right? You don't need that. Okay? Now, if you lose 6 trade out of 10 trade, that is 60%. You lost 60% of your trade. Is that not so? It means you lost 60% of your trade. Now, if you have 4 winning trade, 4 wins, that means you have 40% of your executed trade, because on each 1 trade, that is 10% on 10 trades. That is an example. So now on this 4 win trade, if you were to risk $100 to target 2 risk to reward ratio, 100 times 4, then times, let's get it off right here, then multiply. Okay, we have to use something like a green so that you guys can know that yes, this is a profit on this account. Yeah, okay, this is kind of too bright, you guys might not be able to see that very well for those who have color blindness. Okay, yes, we have 4 wins, that is clear. And on these wins, you risk $100 on the 4 trades. Now you target at least 2 R, which means on this 400 times 2, you make what? 800. By the time you subtract your 800 from your losing trade right here, you are left with what? 200. So the question is, are you not profitable? You are profitable. And what gives you this profit is just a 40% win rate. So with your 40% win rate, are you not profitable in the market? You are profitable in the market because you know how to manage your risk. So irrespective or no matter how powerful your strategy is, if you don't have a good trade management, you can never make money. You can never make money. You can never make money. Right? I hope you guys know what is going on right now in terms of risk management, because this is why most traders fail. So you don't need 90% winning trading strategy to be profitable. You don't have 100. You don't need. Once you can have at least a minimum of 40% upward, you are good to go. 50% you are good. 60% you are a good trader. 70% you are a genius. 80% that is excellence. Outstanding. So you don't really need 90%, 100% strategy before. Now, not like that. None like that has ever existed in the market. Because if you're talking about 1900, it means out of 10 trade, you hardly have a losing trade. Right? So now let me show you guys how you guys blow up your account. Let me now show you guys how you guys blow up your account. So someone say, how come about the 2x 2r? I'm gonna show this back. Maybe you don't have an understanding of this. Someone said, Mr. He said, how come about the times 2r? When I said times 2, I mean you are targeting a minimum of 2 risk to reward ratio. It's unfortunate traders don't even know about 2 risk to reward ratio, 2r. When we say 2r, it means on each trade, when you lose 100, when you have the winning trade, that is times 2. It means on 4 wins, you risk $100 on 4 trade. So when you add all this 100 risk on the 4 trade, it means you are risking 400 on your account and you are targeting 2 risk to reward ratio. So if all this trade resulted into winning trade, that is 80, that is 800, that is 400 times 2. So that is the meaning of 2r. Why by right here, you are actually trading against 1r. Maybe because I did not input 1r right here. So you can get this right here now. So 600 times 1r, the coefficient of r right here is 1. 600 times 1 is still the same value, 600. So that is it. I hope Mr. E now understand the mathematics right here. So don't get confused. For those of you guys who do not like mathematics, no, this is just how guys lose money without putting into consideration risk, right? So this is how you calculate your risk. So Mr. E, I hope you are able to get this information right now. Okay, Mr. E. Now let's move on to how you guys blow up your account in the market. Let me show you guys how you blow up your account. Let me show you guys how you blow up your account, how you blow up, how you finish up your account in trading. Now, how traders blow up their account. Blown up accounts. So let me show you guys how you blow up your account. So you execute 10 trades, right? And after you execute 10 trades, you have 5 winning trades, 5 wins, and you are happy. You are happy, and let's make this to be 7. Yes, you execute 10. You executed. Okay, let's get it back. You executed 7 trade out of 10. You executed 7 trade out of 10. Let's make it to be 7, so that you guys can know what greediness can lead to in trading. Greediness. When you are greedy, when you don't have a good plans, this is what will happen. So on these 7 wins, you risk $100, and then that is times 7. And then remember, you use 2 risk to reward ratio, which is 2r, and that is 700 right here times 2. That is 1,400. So as a trader, you haven't made this before. So after you made 1,400, maybe on your $1,000 account, you are very happy. Wow, 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 wow. You were able to turn your 1,000 trading accounts to make profit plus 1,004. So you are so happy. Your account now turned into what? Into 2,004, right? So you are very happy that, okay, now your account has turned into, your account now turned into 2,004. So you are very happy you haven't made this before. So you now started thinking how you can buy a Benz, how you can fly to Dubai, how you can go for your next vacation in Santorini. You start thinking about, then you now think, okay, if you want to buy a car, a Benz, you need at least like $20,000. If you want to go to Santorini, Dubai, you need like or something like $10,000, $15,000, you know, for just a week vacation. So you now think of it. What if you risk like, or if you take a risk of like $1,000 or $500 on this account? So you now say, okay, let me just take a trade. Let me take 2 trades of risking like of 500 risk. So you went ahead to take a trade of 500 risk. Okay. So which total is 1,000 risk, right? You now you want to use 2 risk to reward ratio, right? So if you can have this trade, that will be $2,000 added to your account. So that will be $4,400. So you keep on having that kind of imaginations. So as time goes on, you add this losing trade. So you lost $1,000 on your account. So from 2004, you minus 1,000, right? Now you are left with 1004. So you never learned your mistakes. You keep on believing that, oh, you made a mistake. Okay, let me try this time. If I can reach another $1,000 on this trade, then you reach another. And this time around, you are so greedy, you want to fight back the market, you want to revenge from the market. So this time you decide you're going to risk $1,000 on just one trade because you so much believe in that trade. So you went ahead, you want to target 2R, so that on that 2R, you should be able to make it to be $2,000 so that you can recover your profit, your loss. So that when you recover your $2,000 with the remaining 1,004, at least you'll be able to make like 3-4. So now you lost this account once again, and now you are left with 400. Now you are so depressed. Now you think of it, okay, I'm gonna try to risk another 400. So you risk another 400, and then you blow up your account. So what really happened right here is you don't have a risk money management. You don't have a risk. You don't have a trade management. You don't have a trading plans. You are just gambling right here. You are gambling right here. You gamble right here. Right here, greediness setting. Right here, you try to fight back the market. Right here, you want to revenge. So right here, desperation killed their account. So this based on psychological analysis of trading. You don't understand yourself. Everything you do right there is a repetition of who you are in the market. So this is based on psychological aspect of trading. So you need to balance your psychological aspect before you venture into trading. And there's a lot of different factors you have to combine in trading. So I hope you guys now understand how you blow up your account, things like that. So you need to be disciplined. So you don't need to take 10 trades in a day, in a week, or whatever to be profitable. You can see that. I have a video I released on my YouTube channel whereby I show you guys how I made almost $2,000 within 10 minutes of trading on the quoted trading platform, that is on binary options. I stated some rules which can guide traders who want to trade on that platform. You can watch that video. That video could really help you to have an idea of how you need to be a disciplined trader, right? So after I broke my rule in that video, I made some losses, but at the end I was able to recover the loss and then come out in profit. So this is just to tell you that once you program yourself, you become part of that rules. So when you go against it, you have to pay the price, right? So this is what I want to share with you guys. Actually, this is market analysis. We later dive into another topic in trading. So right now we already have a day breakout, but the day breakout is not yet confirmed because price can still make a pullback, just like what we had right here, a pullback. So right now you need to start waiting as a trader to see a close of candlestick if you want to trade right here, right? Because what we had right here, imagine we had a strong bearish candlestick like what we had right here, this would have been nice. But if you make the decision that, okay, we had a low high swing, we had a low high swing right here, and then you want to short right here, but based on this structure right here, this could act as support for price. So there are a lot of obstructions, a lot of hindrances in this market. So whenever you figure out hindrances in the market, you have to be very careful in that market. So it's not compulsory you have to trade a particular market. And this is where you need to divert your attention to other assets in the market, right? There are other assets you can trade in the market that has a lesser risk to high reward ratio, right? So whenever a market is too complex, too complicated, the best thing to do is just to switch from that market, because trading is based on game of probability. So why should you take a trade that tends to divide or reduce your probability or reduce your confidence? So this is what I can see, right? I know not all traders can sit down and relax and watch how this trade keeps on going down. Some traders can't hold on. They can't control their emotions. Some traders can never control their emotions and see how the trade is going down. They have to jump into the market. If you can't control your emotions in trading, you can never make it in trading. That is the reality of trading. If you really want to make money in trading, you have to learn how to control your emotions. Sometimes, and one of the best ways you can learn how to control your emotions is try to monitor and study the market without taking a trade for like weeks, months. If you can hold yourself at the front of your computer or your smartphone without taking a trade, even though you know this trade is going this direction, try sometimes to hold yourself to control your emotions. Doing this will help you to build your emotions. I know some traders right now, they have to jump in right now, and probably if they jump in, they make money today. Now this becomes an habit. The following day they actually want to jump in once again, and the following day they could do this and then have their fingers burnt and then blow up their account. So it's not about making profit in the market that really matters. It's about repeating that system to be consistent in making that profit. So it's about consistency. Anyone can get into the market and make profit, but can you repeat that same system to make that money consistently? So if your answer is no, then it's gambling. So consistency is the key. Consistency is the key in trading. Anyone can make profit in the market, but the question is, can you protect the money? Can you protect the money? Ask yourself this question. Since you have been making money, you have been making profit in trading, were you able to defend that profit and able to withdraw that profit? Most of the answer is no, because there isn't consistency in that system which made that profit. So you need to build a system of consistency. When you have a system of consistency, you'll be able to make money. Even though when you are making loss, you know that this is your strategy, and this strategy has been consistent for you. So right now, this strategy is just going through a hard time. As time goes on, this strategy will still give you an edge at the end, and you still win. But if you don't have a plans, you don't have rules, how can you be consistent? You cannot be consistent, right? So consistency is the key. It's not about the profit you make, it's about consistency. A 5-year-old baby can just mistakenly press your computer keyboard, or your little baby at home can mistakenly operate your smartphone and just click on buy or sell and make profit. So if your little baby can mistakenly click on any button on your smartphone or on your laptop and mistakenly execute a buy or sell order and make profit, so does that guarantee that little baby can trade? No. It's just what we call is it coincidence? So most traders in the market, when they make profit, they actually don't know why they made profit. Because if you know why you make profit in trading, you'll be able to repeat that system the next time. But when you don't know why you make profit, you just have the profits, the market will get it back for you. And trust me, the market will not get back for you based on that profit you made. The market will get it back for you in multiple fold. Because the market is just trying to trap you, to lure you so that you can put in more money, so that it can get back what it gives you in multiple fold. So it's about consistency, right? And to be consistent, you have to be disciplined. So that is the rule right there. So learn to be a disciplined trader. And there's no strategy I can give to you. There's no way I can teach you. I can mentor you. I can be your coach, your mentor. If you are not consistent, if you are not disciplined, you can never make way right here. And that is the most difficult aspect. Psychological aspect of trading is the most difficult, and nobody can teach you about it. And do you know why nobody can teach you about psychological aspect of trading? Because psychological aspect really define who you are, and you are the best person who know who you are, and you are the best person to train yourself. I can only tell you what to do. What if you made the decision you are not going to do whatever I tell you? So that is where the problem comes in. So that is where psychological aspect is the most difficult aspect of trading. So you need to work on that aspect. So learn to control your emotions in trading. Don't let your emotions control you, right? You should be the one in charge, right? So thank you guys. So currently right now, my position disclosure is I currently have 3 short positions on US oil, and I've been holding this position right from last week. And I told you guys this is going to be a trade for weeks. So let's go through right here my US oil trade. You can see right now the market is going downward. After I took this trade right here, some traders actually came against me, and they told me this trade is going to go down because they can see a double bottom right here. And I said, okay, let's see what the market is going to have to offer. So they told me we have a double bottom right here. Some traders came against me. They told me I don't really know what I'm saying, or I can't trade, things like that. And I said, okay, let's see how it goes. Actually, the market can decide whichever it wants to go. So I'm just working on probabilities. So let's the market decide. So the market went up based on the double bottom, and then the market capped another strong bearish signal bar. So when the market capped a strong bearish signal bar against their double bottom, I made another short entry. So we pro traders, we trade against the crowd. So we made another short entry. So yesterday after I saw another pullback again, I made another third short entry. So currently right now, all my 3 positions on US oil are in profit. So you have to think outside the box. You have to think against the crowd. Do against the crowd. Thank you guys. So this is what I want to share with you guys today. So currently I have some short position on GBP USD and the Euro USD, and I shared guys in my Telegram group. I've already traded this sell trade setup to break even. So and then I'll be looking to trade more profits since price is currently trading at a point of interest, which is a key level structure. So this is how I approach the market. All right, guys, thank you guys, and then keep note of the currencies I made analysis of last week's Sunday. So if you missed the live stream, you can visit my Telegram group and type the keyword Facebook so that you can watch a copy of the live stream on my Facebook page, right? So all my analysis on GBP USD, Euro USD, Australian dollar USD, New Zealand USD are all coming to what I forecasted. I said expect a pullback. So we are currently having a pullback, and I am trading some of the pullback. I'm trading the pullback on GBP USD and the Euro USD. So and the US oil. So this is like 3 assets I have right now on my watch list, but I'll be holding on my US oil for a long time, and then my GBP USD and Euro USD, I'll make them to be a day trading or whatever, I'll call them on time, because I still can see a movement to the upside based on GBP USD, especially currency paired against the USD. And USD Canada, I told you guys we have to look out for a pullback to the dynamic trend line right there. So we are currently seeing that right now. You can see that. So I'm currently monitoring this. Whatever I'm going to do, I will share with traders in my Telegram group. So if you're right there, if you're not yet in my Telegram group, so you are still missing out, what you need to do right now is to click on the link on my bio through the information right on this whiteboard so that you can get access to my Telegram group and then see what we are doing right there. And then guys, you as well need to contribute in the Telegram group. So, and then take note, this is not a Telegram group where I'm going to tell you buy short at 1.444, stop loss at 1.222, and TP at 1. No, I don't do that. What I'm going to share with you is I'm going to show you my technical views in the market. I will show you the pictures or the point of interest and what you need to look out for. So with all these informations, if you yet don't know what to do, then it means you don't know what trading is all about, and that is when you need to opt in for the mentorship service. Because if I share with you what I'm looking out for in the market and I define probabilities for you, and then you see asking where should you get in, where should you get out, then it means you know nothing about trading, right? It means you know nothing about trading. So you need to have experience about trading, and the best thing to do is you need to learn first before you can make money. You have to learn before you can earn. So if you don't want to learn and you want to start earning, I don't support that, and that is not the best way you can trade. Because I want to teach you to be a fisherman and not someone who always seek or asks for fish. But I want to make you an independent trader so that you can make decisions for yourself. So whenever I give analysis, you can relate the analysis to your strategy and make decision. Maybe my analysis conforms to your ideology or your strategy, or maybe it's against it. So that is the best way you can trade. I don't want you guys to always rely on me for me to tell you stop loss at 1.22, take profit at 1.11, entry at 1. No, I don't do that. I share with you charts, and I pinpoint important structures. I tag important structures. I pinpoint point of interest, and I tell you the probabilities. If you want to go long, these are the probabilities. If you want to go short, this is the probabilities. Now it is left for you now to define the probabilities, and you have to ask yourself, which of this direction has the highest probability with the lowest risk to highest reward ratio? So these are the things you have to ask yourself. So not me telling you do this. In fact, some traders, if it is possible, some traders will want me to help them to operate their computer from my office right here. Just to tell you how some traders don't really know what they want to do in trading. So trading, you have to take responsibility for yourself, and that is how you can learn. Right? And that is where most traders look out for trading signals, and this can never help you. So ask yourself, since you have been using trading signals, did the trading signal improve your trading experience or skills in trading? No. In fact, you get worse. You get worse in your trading career. So not until you take responsibility for yourself, you can't go anywhere. You just keep on moving at the same exact spot. So by the time you keep on counting the year, first year, 2023, 2024, 2025, 2026, 2027, that is if you have never given up. By the time you spend like 5 years, you see you go nowhere. And that is if you have never decided to give up, right? So understand, guys. And that is the best way you can trade. You have to start taking responsibility for yourself. Be independent as a trader, right? So my obligation right here is to share with you probabilities, right? And then you as well need to contribute. You have to get done your assignments, right? So if you are still right there, if you don't know or what trading is all about. If you still don't know how to decode the information analysis, then opt in for the premium mentorship service. And then take note, it is optional. I'm not trying to compel or try to advertise services for anyone. As I told you earlier, I'm a full-time trader and I trade and I make money, right? My stop loss in the market is enough for me to cover my bills in a month. Just to let you know, I am not a baby trader or a struggling trader. Just a single stop loss whereby the market cut me up. The stop loss enough is okay for me to finance my bills in a month. So think of it if I have winning trades in just on a single trade, and now think of it if I have 10%, 20% wins in a month. So you know what that mean, right? So thank you guys. So let's check it out on USD Canada. USD Canada, as I stated, let's clean this chart right here and see what we are looking out for, so we can have an idea of what we got right here. I did this analysis. You guys can go back to my Facebook page and watch more, but let's go through this currency pairs once again right here. So based on what I have on the weekly chart, as you all know, I'm a long-term trader. I look for long-term investment goals. I don't look for short-term no trends. So based on what we have on the weekly chart, this is a bearish engulfing candlestick. A bearish engulfing candlestick at a powerful key level structure on the chart, and we have a resistance structure right there. This resistance structure has been inactive right from the high of the October 3rd, 2022. You can see right there, resistance structure, and this resistance structure acted as a support for price right here. You can see we had a breakout of this descending triangular formation. We had a descending triangular formation right here. On that, this was on the weekly chart. You can see the descending triangular formation right here. So just for you to know the importance of going on the higher time frame to construct your key level, you can see right here descending triangular formation. And this descending triangular formation led USD Canada to a strong downtrend right from this level right here all the way to almost 1,861 pips. That was crazy. Imagine you can have patience to take 1,861 pips. Wow. Wow, wow, wow. And this occurred, that was on 25th of May, year 2020. That was 3 years ago. All the way down to 24th of May, 2021. That was almost like a year journey. Now you can see why the swing trader, the position trader tend to make a lot of money. But only trader who have patience can take this type of trade. Not traders who are looking out for trade within on the 1 minute and 5 minute chart, right? Just single this trade, or just a single of this trade. Imagine you take this trade. Imagine you took this trade at this medium right here, and then you just risk maybe 2% of your trading account, and then you roll all this trade down, all the way down, and you're able to make like as you keep on riding, you keep on adding to your position. Maybe when you got in right here, actually I know this is easy to say, it's easier to say, but by the time you practice, it's become more easier for you. And by the time you focus on one asset, it's become more easier for you. So if I were to trade this trade right here, this is how I'll keep on adding to my scaling right here. I'll keep on adding to my scaling as the trend keeps coming down. So that would have made over 30% on this 30% risk to reward ratio times 2 right here, 2%, that would be 60% within a year. So 60% within a year on just one asset is not bad. No bank can give you that on your investment, on the money you keep in the bank for a year. Even 2 years, no bank can give you that. So just to tell you, the importance of going on the higher time frame. So we have a key level structure. So this key level structure was being broken as a neckline of this descending trend line right from 2020. And it acted as a resistance for price in October 10, 2022, just to show you that history plays a lot of roles in technical analysis. Now, once again, we have another resistance structure that was on the 6th of March 2023 this year. And then once again, price is now testing on the October 2023 this year. So now it's carved a bearish engulfing candlestick. Now what we are looking out for as a technical price action signal is you want to look out for a pullback into the 50% Fibonacci retracement of this bearish engulfing candlestick. So the last time I told you guys there are different ways you can use Fibonacci retracement too. A lot of traders were right here, they actually attacked me and told me no, this is not how to use Fibonacci retracement tool. This is not this is not that. No, there are different ways you can use this tool. An upward swing on the 1 hour chart, on the 4 hour chart is a single candlestick on the day or on the weekly chart. This is what you guys should know. Alright? So, as a mentor, as a coach, when you make the decision you want to come online to teach people, you have to be ready to accept all kind of insults, because we have different traders with different, even some traders who haven't even traded for like 3 months. They keep on telling you this is not how to do this, this is not this, this is not that. You just have to know how to ignore those stuff. So right on this bearish engulfing bar on the which happened on October 2023, this bearish engulfing bar right here, if you move to the daily chart, you're gonna see it's a swing down. It's a swing trend. You can see that? A swing trend on the day chart. Now if you move to the 4-hour chart, you're gonna see it's a strong swing down. So you can see I construct this. Let's remove this Fibonacci retracement on the 4-hour chart. Now let's go back to the weekly chart and apply this Fibonacci retracement tool on the weekly bar right there. As you can see, this is a single bar, and this is the importance of focusing on the higher time frame. Once you figure out price actions on the higher time frame, or if you start figuring out or analyzing price action on the higher time frame, you tend to ignore the noises on the lower time frame. So application of my Fibonacci retracement tool from the peak of this bearish engulfing bar all the way to its low of this bearish engulfing bar in the month of October. You can see right now I have this bar right here. Now what I need to do now is to go to the day chart. Now on the day chart, you can see how this Fibonacci retracement aligns. Now let's move to the 4-hour chart. You can see now on the 4-hour chart, this is the Fibonacci retracement tool. You can see that. Now what I need to start looking out for is to start looking out for how price is going to react to the 0.5 and the 0.618 Fibonacci retracement level, because there are a lot of traders who have figured out this on the weekly chart, but they don't want to sell low. They don't want to short low, and which you should never do. Don't short low, don't long high. So some traders are actually looking out for a better price offer. So they want to figure out a retracement into the 0.61 or 0.5 level. And while in a strong, fast-moving trend, price will usually find rejection at the 0.382. This is an advanced section in Fibonacci retracement tool trading strategy, right? So what I'm looking at for right now, I want to see how price is going to react to this 0.38, 0.5, and 0.68 in combination with other confluence factors in trading. These confluence factors are trend line, key level, technical price action signal bar, momentum, volume, liquidity, chart patterns. These are the things I have to combine. Just like when you want to prepare your delicious meal, you have to combine different ingredients. You have to combine your ingredients, different groceries, different things, just to make the meal to be delicious, right? You can't just want to cook a delicious meal and just put only your salt and you think that is all. You have to put different kind of spices to make everything to be tantalizing, So this is what you do in trading. The more confluence factors you can combine with your decisions, then the higher the probability it becomes. So right here, I want to say, okay, 0.5 right here, I have a key level structure at 0.5. So this 0.5 right here is actually a resistance structure for price at this level right here, resistance structure right here, and then this level acts at the 0.5 retracement level. Likewise, I have a resistance trend line at this structure. So if price can get to this level right here, then this will be a nice short entry for me. So whenever price get to this level, then the next thing is to figure out my technical strong bearish signal, and then I move to the lower time frame like the 1-hour chart to see if I can see a chart pattern like a double top, like a head and shoulder, like whatever you call them, to see if I can have more confluence factors. So this boils down to top down analysis with key level structures, demand, momentum, liquidity, whatever you see in the market. So this is the best way you can trade. So with the summary of what I've stated right here, I'm still looking out for price, how price is going to react to this trend line and the horizontal key level structure and the 0.5 retracement level before I can decide maybe I'm going to go short on USD Canada, right? So this is my decision. Whatever I'm going to do in the market, I will always share with traders. As you can see, price broke the trend line we had in this market. We had this trend line right here. Price broke with a strong bearish volume. Now price is testing once again, so I still want to see more confluence factors. So if I move on the 1-hour chart right now, what are the patterns I can see? So based on the 1-hour chart right now, I can't see yet figure out a pattern right there. So if I can see maybe on this 1-hour chart, or if price can give me another pullover right there, maybe a pullover, or for me to find more technical signal, that would be nice. Alternatively, sometimes I told you price might find rejection at the 0.382. That is if the trend is so strong. So there could be a possible entry right here for a downtrend, and this comes down. If you want to make an entry based on the 0.3282, then you have to have a wide stop loss away. So if you have a wide stop loss based on this entry right here, then it means your stop loss should be above the 0.8 and 0.5, because price might still try to test these structures, because there are some traders who are still looking, who already placed sell limits at the 0.5 and the sell limit at 0.618. Why some traders want to make an aggressive entry at the 0.382. So this is how I define probabilities in trading. I don't just get in based on head and shoulder, chart patterns or double top or this. No, I want to see confluence factors. How many confluence factor can I see supporting those patterns? Not just see double top and then see I want to do this. No, I don't do that. I don't do that in trading. So this is how every trade I take, this is how I analyze my market, and I get my trade and then decide whether I'm going to do in the market. So the trade I took on US oil, which most of you guys were so surprised, no, this is how I figure out my trade in the market. So it's not a rocket science. It's just about having some set of rules. When you design a set of rules for yourself, you're able to know, okay, this is where I want to get in, this is where I want to get out, this is what I want to approach, this, that, blah, blah, you know. So those are the things I look out for in the market. So this is what I have on USD Canada. So USD Canada, you know, FS trading said that USD FSP trading, that means USD Canada may pull back down. Yes, if you can see a pullback and a strong rejection downward, USD Canada can see have a more downtrend. All right, guys. So this is how I analyze the market, and then it's time right now. You guys can see I'm talking. I need to take more water right here. No? So this is how we trade every day, and it's not about making profits. It's not about making profits. It's about define probabilities in trading. You have to define probabilities in trading. So the more probabilities you can decide, in trading, then the higher chances your setup tend to become, right? So this is how you trade. Good. So guys, so US gold is going down aggressively, so I'll keep watching to see what the market is doing. And as well, since I have a position on US oil and the position is going down as well, so I don't want to get into any market anyhow. So if I'm going to take only gold for this week, it's okay. So I'll keep on monitoring to see how gold keep on going. Maybe it's going to keep on going down, 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 down. I'll keep on seeing, keep on monitoring to see how it goes. Let it go, let it go. I'm not going to chase the trend. I'm not going to jump into the trend. I'm not going to chase the trend. I will never chase the trend. All right, guys. You guys can follow me on YouTube. Someone make a request on Canada switch. Canada switch broke the trend line. Like I stated, if we can see a rejection from the trend line, but the trend line failed to hold. So the trend line failed to hold, which we can see right here. Trend line on Canada switch failed to hold based on the forward chart. So the trend line was broken. Since the trend line was broken, let's see what we have on the weekly chart. The weekly chart is down, but we tend to find a possible technical bull signal at the support structure. So we still need to wait to see, maybe this is still a pullback, because the last week bar was still a strong bullish candlestick. So based on what I can see on last week bullish candlestick, I'm still kind of skeptical, kind of careful to short on this asset right there, right? So because what we add right here is still a higher low structure. This is still a higher low structure to the higher low structure right there. So I'm still careful right here. So something about me is once I figure out setups in the market, the last step is to filter out trades that has the easiest setup. I don't want to put myself in a complex setup. I have no reason to take a complex setup when I can figure out a simple setup. So simplicity is the key right here. I don't believe in complexity. Simplicity. I treat trading to be simple. So if you take trading to be difficult, it will be difficult. If you want it to be simple, there's a way you can make it to be simple. So that is just it. And the reason why traders make things to be difficult for themselves is they want to trade everything that forms on their trading chart. I've seen a situation whereby a trader want to short gold. At the same time, the trader want to short GBP USD. The same trader want to short Euro USD. The same trader want to short USD Canada. The same trader want to short USD switch. The same trader want to short USD yen. The same trader want to short Nasdaq. The same trader want to why not just choose 1 or 2, 3 trade and stick to them and manage them? Stick to 1 or 2 and manage them. Simple as that. Simple as that. So if I have an active winning position on US oil and I have active position on the GBP USD and the Euro USD, so why should I keep on putting myself in distress risk in different markets? Why not I just stick to those assets that I'm creating a winning position and I keep capitalizing on them? So that is just it. So that is why most time when I have a active position in my direction of anticipation and they are in winning trade, I ignore that setup. I ignore them because I don't want to expose myself to a lot of risk. With the little trade I have in my position, now the mission is to capitalize and see how I can hold on to that nice, wonderful relationship to the end. So that is it. Someone said, can you give me a chart analysis on Euro Australian dollar? Euro Australian dollar, my chart right here. I don't know how I pull out of Euro Australian dollar on this chart right here. I pulled out of Euro Australian dollar on this chart. Okay, what I'm going to do is I'm going to use another chart right here. I have different charts right here. So let me just go right here and check another chart. So this is another chart right here. So I have a white screen. You can see I have different white screen. So I tend to have like a 3 screens, so projected on different charts. So this is a chart on gold. You can see how it's going down. So I'm not comfortable to chart this kind of market. So let's go to Euro Australian dollar. Euro Australian dollar, we are having a pullback. Let's check the weekly chart. I have some drawings right there. I don't know why these drawings are not showing on this chart. Let me just try to reload the chart. Let's reload the chart. Someone said I'm in trading, yeah, pro. Okay, someone else said I'm going to load analysis on Euro Canada. If you are still in the live stream, guys, if you are yet to follow me on Facebook, we are missing a lot. You guys are missing a lot if you are yet to follow me on Facebook, because most of the analysis I release right here, all the full copy are on Facebook. Because most of you guys still come here and still make requests of analysis in the market. These are analysis I have already analyzed. So I don't know what is actually going with the network right here. Things seems not loading so fast the way I expected. So I actually don't know what is going on right here. So seems the internet doesn't want my brother to have analysis on euro paired against the Australian dollar. So let's try to see if we can reload this chart right here. I'll be trying to reload this chart for you, but the chart is not opening. I'm reloading this chart. The chart is not opening. What is actually going on? Okay, seems we have a chart right now, but it's not Euro USD. Let's try to see Euro Australian dollar, Euro Australian dollar. Okay, now we have a good chart. The chart has been loaded. Right. So let's first thing on the weekly chart. The trend line is still acting. If you attended my live stream, you'll see what I stated. I said there are different conditions on this asset right there. Euro Australian dollar, this dynamic support trend line is still holding for price. You can see still holding for price, support. So a boost are still defending. You can see that. So currently right now, price is retesting the minor key level structure at the price of the 1.66747. We have a key level structure right here. So as a trader, we need to look out for a day technical signal right here. If you want to take a 4-hour chart right here, it's going to be very risky, because I know some traders would have made a short entry based on this doji candlestick right here. But I don't want to do this based on the strong bullish momentum right here, because we want to do this right here. This is a strong bullish momentum. Unlike the weak volume we had right here, actually this was at resistance for double top. So this level is a minor level. We can call this right here as a supply level as well. Whenever price get to this level, we have a supply to the downside, supply, and this level right here is kind of a very complex, pattern right here. So I would rather wait for a day candlestick. And then the best way I think you can attend this market right here is, if you can see price closing back into this neckline. Remember, we have a neckline right here. The neckline of this, in upright head and shoulder. This is the left shoulder. This is the right, and then this is the head. This is the right shoulder, and then this is the neckline. This is the neckline right here. So the pattern right here can actually close back. If the market can close back all the way down to this level and show a strong bearish close, then this could be a low high swing, which could lead to the strong bearish breakout of this rising trend line for a downtrend. So if I were you, this is what I'll be looking out for on this asset. I'll be looking out for a rejection So the question now is a rejection from where in the market. So let me now show you where I'll be looking at for a rejection based on what I can see on the weekly chart. The weekly chart is giving us a technical bearish setup, and this pattern right there could still result into a symmetrical short-term breakout. Anything is possible in the market. The market could break to the upside or to the downside. So that is one of the technicalities of symmetrical chart pattern. Because most of you guys, you don't really know how to trade this pattern. Let me just show you a whiteboard right here. Let me show you guys a whiteboard. So in a symmetrical chart pattern, triangular formation, whenever you have something like this, okay, let's get this to a black color. So when you have something like, okay, this was example of what we had on Euro, Australian, Canada, right? We have something like this. So this type of market, when you have something like this, so if one's price keeps on gravitating within this median right here, price will break to the upside or to the what? To the downside. So the best way to approach this market is to wait for this market to make its final decision. Maybe it's going to break to the upside or to the downside. So this is the best way to approach this kind of pattern if you want to trade them, right? So if you want to approach this market and then you want to jump in, if you want to jump in before the market makes its final decision, then you have to see a strong technical signal before you do that. For example, if I want to take this type of market right here, if I can see a move of price such as this way, whereby I can see this type of breakout and then see something like this, then I know that yes, in this market, this was the last low high swing right here. This was a low high swing right here. Why this was a low high swing right here, right? So this is an example. Okay, I know, okay, this is a low high swing supporting this downtrend, and what we had right here is what we call clustering of price, because price tested this support level at a short period of time. So this could be like a 5 days test, 5 days test, right? And the right here could be like a 10 days test, 10 days. So the further distance, the longer the period, it shows how strong that support was. And this level right here could be like a 15 days. So this is how you read momentum. What I'm showing you right here is what we mean as the momentum. The days it takes, the speed. This measures the speed it takes to test this level right here, the speed, right? So this is based about your momentum analysis in trading. Unfortunately, most of you don't know how to analyze all these things in market, and this is why most of you just jump the trend and then trade, and then at the end you are being reversed in the market because you actually don't know how to read all this information in the market. So if you know how to read those information in the market, you tend to avoid most of these traps being set up by institutional traders in the market. So in references to what I did on the whiteboard right here, so if I were you, what we had right here, you guys now should have an idea that in this market right here, we have a flow of trend, right it like this, we have it like this. So if you can have something like this, then this would be, sorry, someone called me in, I have to quickly quit the call. Hello, how are you doing? Please, I'll call you back on the webinar right now, okay? I'll call you back. Yeah, I'll call you back on the webinar, right? So, sorry for that. So, so this is how I'm gonna be willing to approach this setup right here. So if I can see something like a low high right here, and this is a higher high, you guys need to know that this is a higher high. Let's expand this chart so that we can see more information right here. So this is a higher high right here, and then this is a higher low right here, and this is a higher low right here, and this is still a higher low. So we need to see a kind of a change of momentum, change of market structure, and validation that a bullish trend is giving us a well-defined bearish trend, right? So this is how I approach the market. So, and then no recent I've been posting on my TikTok, Facebook, YouTube page. People have been asking me, they want to be my student, they want to see me one-on-one, they want me to teach them, mentor them one-on-one. The reality is I am not just only a mentor, a coach. Majorly to tell you the people, I think I have to let you guys know the truth about this all this teaching and mentoring on this TikTok and all this online stuff. When I was still a struggling trader, I made the vow, if I can become a profitable trader, I'm gonna help struggling traders to learn how the market operates. And Right now, I'm trying to give back to the community to help traders. So for those traders who are asking me, do I have a physical store where I mentor, where I teach people? I don't have that right now because I'm a full-time trader. I trade my personal funds and I trade my private investors funds. So, and I don't want anything that will tend to affect my real business of trading, right? So there's an agreement I made with my personal private investors to manage their fund, and then I don't want something that will distract my attention from my with the agreement I have, right? So, but as time goes on, I will try to find a medium whereby maybe we can have a physical store. But the problem of a physical store, even if you have a physical office, I don't think I'm gonna be always right there to teach people, because most time I'm always in the market, trying to make research. Not all the time I always trade, but most of the time I make market research. Because I'm not only a trader in the forex market, ranging from the forex, stocks, cryptocurrency, commodities, and the indices market. So these are the 5 instruments I trade, 5 markets I trade. So I have to devote attention, time, dedication to keep up with the market. So trying to open an online, or an offline, a physical or school or academic center is just like trying to add more responsibility on my shoulder. It takes a lot, unlike when compared to the online. Online right now, I'm in my office, right there. I can easily connect to the internet, and then you guys meet me online, and then we talk, we exchange information. But when it comes to physical offices, I have to be right there to stand at the front of the whiteboard or the screen and then educate you guys. So this is going to be so stressful, and then add more responsibility. So for now, I don't know what could happen in the future, but as time goes on and I start making plans about that. But currently right now, for those of you who really want to learn, I think this is the informative word, right? So you don't actually need to be present in a physical office or a physical building before you can acquire the skills for you to become a profitable trader. All you need is your zeal, your time, be disciplined, and then find a mentor. I mean a sincere mentor. It's not necessary it has to be me. No, you don't. It's not necessary you have to follow me, and that is what I always tell traders. It's not compulsory. You need to You need to be under me to be your mentor. We have different traders who are profitable online, and then we have different traders with different strategies. So if you have been following my teaching, my mentorship, and you think my strategy is kind of too complex for you to understand, then you can switch and check other mentors who offers mentorship program. Maybe their strategy is kind of simple. And before you switch to them, make sure you have an evidence they are actually know what they are doing, because we have a lot of fake mentors on this platform, and which they try to imitate and then deceive innocent traders, and then try to portray themselves as a profitable trader. And what I actually tell traders is not about your mentors, your coach showing you about money, about material things of life. And this is what I don't do. If you have been following my teachings right now, I've never displayed anything about money, about cars, about houses. Of course, I have these things, but it is of no relevance to what we do right here. It is of no relevance. Showing you guys money, cars, my car, my house, it is of no relevance. I don't see that as relevance. Showing you guys about the money I make, it's of no relevance. What I think is relevance right there is to show you how I do it. And what I think is relevance right there is to show you my track record, how I make profits. And which I've shown you guys. My track record is right there, the amount of the percentage I made last month in trading on the trading signals I sent out to traders in my community. So I think this is the best way I can motivate you guys, not showing you guys, because I think when I show you guys about houses, cars, other traders might have a wrong information or wrong view about it, whereby it could lead to frustration and desperation. So that's my view. And I'm not right here to condemn people who do that. People show material things of life. I'm not there to condemn, because our understanding is different from one another. That is based on my own personal understanding. I think the best way I can educate you guys is to show you how the real trading is being done. Right? So that is it. So right now, guys, I need to take a break. I need to eat the gym. Try to eat the gym, and then I've been sitting down, and I need to eat the gym to go on some exercises so that I can feel refreshed. You guys need to learn to take a break from trading. Do what you like to do. It could be going to play football. Actually, I don't like playing football. I'm a golfer. I like to play golf and then eat the gym. No swim, no go on trip, no whatever. So you guys as well need to take a break, right, from trading, right? So right now I'm gonna be going on a short break and then I'm gonna be leaving my trades on. I told you guys, no, you don't have to keep on monitoring your trade from morning to night before you can be profitable. Just set your stop loss, trail your profits, let the market eat your stop loss. If the market eats your stop loss, no big deal. The market prove you wrong, and if the market keep on going down, let it keep on going down and eat your take profit, right? Follow your plan. That is it, right, guys? So disclosure, my trades are still on. US oil, GBP, euro, they are still going down the way, down. So let's see how far they can go, right? Thank you, guys. So you guys can just get access to my Telegram page right here. You can discuss if you want to have more information. If you have anything you want to share with me, ask me, okay? And for those of you who have been making requests, you are a beginner, you want to learn how to trade, please can you teach me? Please get access to my Telegram group and make sure you always attend my live stream. And as well in the Telegram group, always contribute to the discussion in the Telegram group. Always contribute and ask questions and make suggestions of questions, topics you want us to discuss in the next live stream, right? So you guys, once you are in a Telegram group, you can always make requests, suggestions of topics, things you think we need to discuss on the next live stream, right? Okay, good. So now it's time for us to go. So I got to hit the gym. So guys, take care of yourself and then play safe. No, trade safe. Yeah, trade safe, right? Thank you, guys.